Homebuilders ETF. Homebuilders ETF skyrocketed on today's news that more than likely we will see interest rates moving lower, or at least it's been penciled in. XHB stock. This is the ETF for the Homebuilders ETF. This is iShares or ProShares, one of those two. This is one of the biggest ones out there. And I follow these home builders because I'm looking to actually get a house myself. I had other plans. Those plans got sidelined. I'm going to stay here in the United States for now. Given that, I follow Homebuilders ETF XHB stock quite regularly. It soared on today's news. Let's jump in and ask the question, where's its value? How's it doing? And will it go even higher? There's a couple charts I want to show you. Let's jump in. If you're just finding my channel for the first time, thanks so much. I'm an economist first and foremost. I look at the economy and how that will affect the stock market. Then I look at individual stocks from a value investing perspective. We are looking at the Homebuilders ETF. This is a XHB, which is the Spider series. This is the 3-minute bar chart. And as you can see, it soared pretty nicely on today's news. Of course, the news being the Federal Reserve is penciling in the opportunity or possibility that they will lower interest rates 3 times next year should they achieve their goals. The goals, of course, being get inflation down to trendline 2% target, number one. Number two, they need to contract M2 money supply. The Federal Reserve is actually, $95 billion a month. They are no longer rolling over in debt. So effectively, this starts the process of constricting the money supply. That would really have a big effect. So far, we haven't seen any kind of real slowdown in that regard, but that could really kind of force the Federal Reserve to move should they need to. We'll see how that plays out. But in the meantime, the Homebuilders ETF XHB, you can see that it went up like a rocket ship. Here is the Case-Shiller Home Price Index. How expensive is a house? This pretty much boils it down for you. All-time highs, probably going to move higher. We are somewhere in the United States, we're something like 5 million homes behind schedule. That home builders have not produced nearly as much as the country needs. And this has been a problem for a couple years. Ever since really kind of 2008, home builders really kind of slowed things down. And from there, price has kind of moved upward when you look at what happened in 2020 with interest rates dropping so much. Let's take a look at the 30-year mortgage rate. This is actually really good news for home builders because as interest rates move lower, so does the 30-year mortgage rate, which makes homes more affordable for individuals. So home builders, of course, would see their stocks moving higher. Hence, the Homebuilders ETF XHB shooting up like it did. I wanted to take a look at kind of a breakdown of some of the key elements inside the Homebuilders ETF. The first two you're looking at, Williams-Sonoma, believe it or not, that's the number one holding for the Homebuilders ETF XHB, which if you look at yield here, 7.45. I did a video on Williams-Sonoma just the other day. Williams-Sonoma is actually very undervalued when you break it down. It's a solid investment yielding some 7.43% instead of the 10-year treasury yield, which was at 4.05, 4.06% right now. Williams-Sonoma is kind of all that in a bag of chips. It falls in the category of home goods, which would be in the Homebuilders ETF. Carlisle Companies, the next one, again, 5.90% yield looking forward at estimated earnings per share versus today's stock price. And I kind of went through and I looked at a bunch of them. A lot of these stocks are undervalued relatively compared to the 10-year benchmark. So when you look at how much gas could be in the Homebuilders ETF XHB may have some upside. If the mortgage rate continues to kind of mellow out and slide just maybe a half a basis point more over the course of, say, the next year, this makes home affordability much higher than it was just last month. Given that, with the 5 million deficit that the home builders are in, that they have to produce more homes, if you increase the capability of individuals to get in because it's cheaper, with interest rates moving lower, home builders are going to do very well going into the future. This assumes that the economy kind of moves forward in some manner. The Federal Reserve believes so. Let's give them their credit for that. Let's see how it plays out. We don't know if they are going to have to raise interest rates later, but they've penciled in that, yes, it's a possibility to lower interest rates. We'll see how that plays out. In the meantime, here's a look. This is the Homebuilders ETF XHB again, but this is the weekly chart. Give you kind of an idea as to where things were not too long ago. XHB stock has soared kind of high, hitting all-time highs ever since the lull in November when interest rates were moving up as much as they are. XHB has been on fire. There's a lot of juice left in the tank when you break down some of these stocks inside of this Homebuilders ETF. So it's possible that it could continue higher. Keep an eye on, of course, mortgage rates. If mortgage rates sort of slide down lower very quietly, XHB stock could continue higher for longer. Make sure to hit that like and follow button. I'll break down the economy, individual sectors, individual stocks, from a value perspective. Make sure you hit that like and follow button. We'll see you in the next video.